Hey everyone, this is Derek from optionboost.com. I have a few setups I want to share with you guys going into tomorrow's trade, to Wednesday's trade. I have you looking at a 4-hour chart of the VIX, and if you notice this gray area up here, we seem to be coming off of this high bid of implied volatility, meaning that we got a scare, everyone went out and bought some options, and now they're starting to feel a little more complacent in the market, and implied volatility is being bid down. Now we want to catch this move, okay, and we want to look for setups that kind of, take advantage of this mean reversion that we have going on in the VIX. We have it, going up, going down, ping-ponging between these two gray areas here. And what we want to do now is we kind of want to look towards, what is holding support, what has a bid up of implied volatility, and what might be, what can we fade in terms of implied volatility on single name stocks. If I take you to the SPX cash index, you can see that we had a bid down. Basically, we broke support briefly this today, and we actually closed above support. So what it did when we tagged this 100-day moving average and pushed back up is everyone got scared, everyone kind of bought a lot of protection, and then they're starting to unload it now. So what we want to do tomorrow, we want to see this level in the cash index hold. I have this level at about approximately 1357.68, something like that. I mean, obviously it's a super easy level of support to see, and if you flip down to a 30-minute chart, you want to see that level hold. Okay, you want to see higher highs and higher lows, and have this level that's been in control for quite some time hold to tomorrow's trade. Now what we want to look for, as I said before, is names that have a high bid on implied volatility, meaning that the option market has bid up the price of those particular options. One name that I want you to have a look at is LULU. This is Lululemon. And you can see we kind of mimic the market in Lululemon a little bit, but we didn't break support. We have a nice level to work from. Okay, this 71.13 level, you can see, very easily where we can get in and out of this trade if it doesn't go in our favor. We have implied volatility ending the day at about 36.58. If I take you to the options board, you can see that the implied volatility on the May options and on the June options are all the way up to 52, almost 53. Okay, so we want to take advantage of that, and the one way that we like to take advantage of selling implied volatility is through bull put spreads. So in my course, obviously I talk about which bull put spread to use, and I myself like to favor the one with the 33 delta, or the closest to 30 delta. All right, and here we have one that's 32, 33 and change, something like that, and it's at the 70 strike in June. And to me, this seems like a nice play. Okay, selling the vertical here at the 70 strike in June. You're going to be collecting some time premium as this goes on. And one thing I want to stress, though, is that we need to hold that level that I showed you in the SPX. All right, we want to hold this 1357.68 level, 57.50, let's call it. That level we need to have hold throughout the trading day. Okay, and we need to have it not be broken. If it starts to break and we start to get a bid down in this name in Lulu, our line in the sand is this 71.13, or let's call it just 71. You need to be very disciplined and get out of this trade if it's not working for you. Okay, and don't even give it a second thought. Okay, if you want to be successful, and you want to not lose a boatload of money on these bull put spreads, because remember they have the gamma risk, which basically pushes up gamma, affects the delta, which compounds our losses when we're wrong. So we want to get out really soon and not even think twice about it. Okay, so your line in the sand, 71.13 or 71, bull put spread tomorrow. Let's hold the level above the SPX, and let's have a target of around, let's say, maybe 80, something like that. Or if you get maybe 80% of your credit received on the bull put spread, you're doing really good. Okay, so I hope this helps. Send me any questions about this trade or anything else to Derek at optionboost.com, and I will talk to you guys soon. Thanks. Bye.